Welcome to Deezen Shira and Associates series of podcasts. My name is Cynthia. With me today is Chet, International Business Advisory Manager here in our Beijing office. Deezen Shira and Associates is a specialist foreign direct investment practice providing corporate establishment, business advisory, tax advisory and compliance, accounting, payroll, due diligence, and financial review services to multinationals investing in emerging Asia. Since its establishment in 1992, the firm has grown into one of Asia's most versatile full-service consultancies, with operational offices across China, Hong Kong, India, Singapore, and Vietnam, in addition to alliances in Indonesia, Malaysia, Philippines, and Thailand, as well as liaison offices in Italy, Germany, and the United States. Today we'll be talking about corporate hijacking. Chet, why don't you tell us about what is corporate hijacking and why is it important for foreign investors?
Thank you. That's a great question. Fraud is a common subject of discussion in China, but not so common is the subject of corporate hijacking. But it's still prevalent. Corporate hijacking is a problem in China, and it's something foreign investors need to be aware of in addition to the traditional regular corporate fraud. Corporate hijacking is very different than corporate fraud in the sense that it's a very open and overt seizure of control of the company's corporate legal structure, whereas traditional corporate fraud is a more subtle, secret thing that is done discreetly. So that's the difference between the two, and yet both are very important for foreign investors to be aware of here in China.
Thank you, Chet. Can you tell us about the anatomy of corporate hijacking and how can foreign investors avoid it when operating in China?
The anatomy of a corporate hijacking is very important to think about in order to answer the second part of your question, how can foreign investors avoid it? So there are certain control points in a corporate structure that allow someone to seize control of the legal structure. And those control points typically are the physical chops of the company, the corporate chops or seals. Another control point is key positions in the company, such as being the legal representative or other senior manager. Another control point is related to the finances of the company. And one is just who is the accounting firm or audit firm, and also who is registered as having access to the bank accounts. And there are some other control points in the company too. For instance, obviously, the person who controls access to the facilities or the premises of a company, that would be a control point. And also there are certain critical assets. Besides the facilities, there may be equipment, there may be VAT, Vapiao printers. So being aware of these control points and who is managing those control points is the key to avoiding a corporate hijacking. So corporate hijacking is more likely to occur in certain circumstances, perhaps where new management is coming into the company and wants to conduct a review of the finances, and maybe local managers fear that some malfeasance, some poor practices may come to light. They may react defensively. Also, if somebody is being considered for termination and they're aware of that, they may react defensively. They may seek to try to seize one of these control points, the company chops, the financial records or who is maintaining them, the bank account. They may choose to use their control or their access to those control points to seize control of the legal structure of the company, and then maybe use that as leverage to negotiate severance pay, higher severance pay, or some other kind of benefit in anticipation perhaps of them being fired or terminated. That's the anatomy of a corporate hijacking, and those are the control points. And it's important for foreign investors to understand those control points so that they can prevent them from being seized and then used for leverage for some kind of benefit. So the other thing to think about here, and it's mentioned in the article, Anatomy of a Corporate Hijacking, is just that unlike in Western companies and business contexts, it's very difficult to fire somebody here in China. So this is an exacerbating factor that makes a corporate hijacking more difficult to manage. Rather than being able to immediately terminate and remove somebody from a key position in a Chinese corporation, there may need to be a very carefully orchestrated termination and severance, because if it's not done properly, there can be legal ramifications for firing the employee without cause. Also, if the person has the key role of legal representative, even though they may be fired and even removed from, say, the company's premises, they're still in the corporate records on public file with the Chinese Administration of Industry and Commerce, that person will still be on file as a legal representative and ostensibly have the full power and authority to bind the company. So understanding how to terminate somebody consistent with Chinese labor law, and also terminating somebody in a way that they are removed from the public records as legal representative as quickly as possible are two other key factors to keep in mind to prevent a company from being hijacked.
Thank you very much, Chet. Your insight on this topic is very valuable. Thank you for joining us today. For further insight into regional economic environment in Asia, please visit our publishing subsidiary Asia Briefing at www.asiabriefing.com. Here you can find news, commentary, magazines, guides, multimedia, and more, which help guide foreign investment in emerging Asia.